Now, there was a surprise rebound for Singapore's exports in June, supported by demand for non-monetary gold and pharmaceuticals. That's after May exports bore the brunt of COVID-19.
The worst seems to be over for Singapore's exports, as some economies around the world reopened for business. Japan joined other markets, South Korea and Taiwan, in a phased reopening of its economy. And these markets were the top contributors to Singapore's exports last month. Non-oil domestic exports in June surged 16%, almost double of what analysts had expected. But looking beyond the top line, the strong showing was bolstered by two unpredictable clusters. Non-monetary gold soared 238% as demand for the safe haven asset grew, while pharmaceuticals exports continued to be a key contributor, jumping 31% on year.
The share of pharmaceuticals in total NODX has gone up from around 10% last year to around 13% this year. I think as we continue to step up, for instance, the production and the export of all the COVID-19 test kits and some of the other medical supplies that is still in high demand around the world, I think we will probably see continued support from the pharmaceutical side.
Electronics exports, meanwhile, climbed 22.2% on year, supported by the work-from-home trend. Overall, economists say exports are still on an uneven recovery.
The fact that it's not really broad-based does suggest that external demand actually still remains weak. It's only certain sectors that are doing better than the rest. So in that sense, the fact that it's not broad-based does suggest that sustainability of this pickup or this strong showing may actually be questioned.
Although last month's pickup was better than expected, it's still not enough for some economists to revise Singapore's GDP forecast upwards.
We may not see the strong June numbers continuing to sustain into the third quarter. So it's going to be like a V-shape where you had a very sharp drop in second quarter, a little bit of a snapback in June, and then it may kind of like waver from here in the months ahead. So at this juncture, actually, I'm quite comfortable with our full-year growth forecast of 5.5% year-on-year contraction for the Singapore economy.
Some economists expect exports to be out of the woods by the second half of this year. But the pace of recovery will be gradual, as external demand is likely to remain weak amid a coronavirus-induced recession.